1 month ago, HIMS and HERS was the market's favourite stock. Since then, sentiment has fallen, along with the stock price. Is the CEO selling reason to be worried? In this episode, we will cover exactly what happened, some major news regarding lawsuits and GLP-1s, what products are in the pipeline for HIMS that could cause major growth, and finally, my valuation on the stock. Let's get into it, guys. So HIMS and HERS down 55% from its all-time highs a month ago, but should we be worried? That is the real question that I'm going to answer in this video. So let's do a quick little recap. What is HIMS for those who don't know? HIMS and HERS operates a multi-specialty telehealth platform that connects consumers to licensed healthcare professionals. Essentially, they can sell products that you would usually need a prescription for because they have licensed healthcare professionals that look through a few questions that the consumer answers when applying to receive the product, and then they can actually ship the product out because it's been approved. It's basically an approved prescription at that point. So the company offers a range of health and wellness products and services available to purchase, normally on a monthly recurring basis. Now, I know a lot of investors like recurring revenue businesses, and HIMS is one of them, usually on a monthly basis. And they sell products in a few categories, weight loss being their newest and fastest growing section. In terms of the categories that they sell products in, they sell products in weight loss, sexual health, dermatology, mental health. They're going to bring hormone health to the United States soon, and they currently sell it in Europe, and they're looking to bring longevity, so basically anti-aging, to their product line. People always trade HIMS and HERS as if it's just a GLP-1 company, and GLP-1s are weight loss drugs such as Ozempic, and you can see this very, very clearly in the price chart for HIMS and HERS. They originally were compounding GLP-1s during the FDA shortage, and their revenue went up 100% year over year, and you can see that rise here. And then the shortage ended. The FDA declared that the shortage had ended, and now HIMS would not be able to sell compounded GLP-1s anymore. So what happened is HIMS said that they were just going to sell personalized GLP-1s, which means, under certain regulations, that they can sell GLP-1s still, compounded GLP-1s that aren't essentially branded, like Ozempic is branded because it's owned by Novo Nordisk. So what happened, you can see on the chart here, the shortage was over, it fell. I actually bought into the stock around this range, 35 is my average buying price. Then the stock shot up very rapidly, and there was an announcement of a Novo Nordisk deal. So they made a deal with Novo to sell actual branded Wegovy and Ozempic on the HIMS and HERS website. But then the deal was off. Novo cancelled the deal, essentially saying that HIMS and HERS was illegally mass compounding GLP-1s because they were still personalizing these GLP-1s and selling them for a cheaper price whilst having a deal with Novo Nordisk. And Novo obviously didn't like this at all. So the deal was off. The stock price dropped a lot, down to about $41. Then we had a slow climb up where people kind of forgot about what had happened with Novo, and there was a lot of rumors that Novo were going to sue, and then we came near earnings, and the stock absolutely shot up, absolutely rocketed up, and then Q2 earnings hit, and the stock fell a lot on that day, due to factors we will get into when I talk about Q2 earnings. Since then, there's been a huge negative sentiment, and this has brought the stock down. It was literally 41 when I made this presentation. Originally, it was 41. When I went to record it, I've had to update this price chart because of the recent spike, which we will get into in a moment. A lot of negative sentiment came from the fact that the CEO is selling the stock. HIMS and HERS CEO sells 33 million in stock after a massive rally. Like I say here, the price started tanking further. It did that initial drop, then he started selling the stock and the price started tanking. But the truth is, when it comes to the CEO selling it, Andrew Dudum is still the largest shareholder of the business. He had 10.1 million shares, he sold 835,000 shares, and he still has 9.3 million shares left. And you have to remember that this is how CEOs and executives get paid. He said that he was taking money out for philanthropic purposes, and I personally believe him because he sold this heavy before, but at $8 per share. This is the sales volume, and this is Andrew Dudum sales volume, and he has done just the same amount here back in early 2024 when the stock was at $8 per share. So the thought that Andrew Dudum is selling because he believes there's something wrong with the business could be drastically flawed considering the fact that he's done this before, and he did this before the stock actually started running up drastically over the course of 2 years. Key takeaway here is we never know why insiders are selling, but most of the time they are just trying to get paid. So another reason that there's been huge negative sentiment towards HIMS is for some reason people are thinking that Novo is scary again. People think that Novo are going to file a lawsuit to HIMS and HERS, but the thing is, Novo can't actually directly sue HIMS for FDA violations. Only the FDA has enforcement authority. So what does this mean? It means that only the FDA can basically crack down on HIMS, and Novo can't go directly to HIMS and sue HIMS for violating the FDA. So Novo could potentially sue the FDA, but not HIMS for failure to enforce the law. They have no private right of action, and this is specified in 21 USC 337A. If you want to go and have a look at that, you can look at that yourself, and you will realize that, Novo cannot actually sue HIMS directly for this. Good news relating to lawsuits is that Eli Lilly have actually fumbled their lawsuit against two smaller compounders. So this is Sabina Hamite. She says that she attended the hearing for the Eli Lilly versus Mochi case, and 90% of the hearing was the judge berating Lilly's counsel for better evidence and direct harms to Eli Lilly. She told Lilly if they didn't like Mochi selling compounded medication, they should go talk to the FDA and Congress. This is exactly what I was talking about a minute ago with the law here. With they have no private right of action to sue someone individually in the court of law. They can only go to the FDA. She also said, when it came to personalization, the judge pushed on concrete injury to Lilly and said, if you don't like what they're selling, go to the FDA. This is exactly what I was talking about a minute ago. And more recently, this was yesterday, both Lilly and Novo have sued smaller companies that sell compounded versions of their patented drugs. On Tuesday, a judge dismissed a case Lilly filed against Willow Health, siding with the telehealth company's argument that its version of the drugs are in fact personalized, which is the same argument HIMS has made when Novo publicly accused it of illegal behavior. So the whole narrative that HIMS is going to be sued and that the personalization is not actually, doesn't give them legal right to compound, seems to be slowly fading, especially as this case has just been thrown out. This is really good news for HIMS, and this is why the stock was actually popping yesterday and today. So another reason that HIMS and HERS fell after earnings was people think that the Q2 earnings flopped. So here you can see the revenue and the percentage change in blue, and you can see that in the blue they had a very sharp decline in revenue growth year over year. Their revenue quarter over quarter actually fell a little bit. In my opinion, investors should have expected this. HIMS actually said that basically the FDA ending their shortage for GLP-1s would cause a high churn for a lot of their customers. So a high churn rate means that a lot of customers would leave the platform. The customers that were originally on the GLP-1s, the non-personalized GLP-1s, and this high churn was already something that they had warned about. So I don't really understand how the sentiment has become so negative recently over HIMS and HERS when this was already expected to happen. They spoke about it in their Q1 earnings. I personally didn't see this as a major issue. Also, we have to remember that 1.5 months of Q2, their ad spend was wasted on the Novo Nordisk and HIMS and HERS, like the Novo Care that they were providing, the new product that Novo Nordisk and HIMS and HERS had come out with. A whole month and a half's ad spend was wasted, and ad spend is really important for HIMS and HERS because if you look at the ad spend as a percentage of their revenue, it is incredibly high, and they use a lot of ad spend to increase their revenue. But nevertheless, marketing as a percentage of revenue is decreasing, and this shows that HIMS can scale profitably, which is really good to see. We're seeing the margins increase because of this. People used to be very concerned that marketing was over 50% of HIMS' revenue, and now it is actually much less than 50% revenue, which is really good to see. I think another thing that shocked investors and made a lot of them sell out was the free cash flow statement. So when it came to free cash flow, you can see that it was really accelerating quite fast, and then all of a sudden Q2 we have a huge decline down to negative 19 million in free cash flow. Now, what happened, you might be asking? Well, the cash flow statement, I've been through the cash flow statement, and it actually shows a very large purchase of inventory. So The company says that they were anticipating potential volatility and tariff uncertainty, and therefore they brought in inventory early so that they could, kind of have a set price and a guaranteed price on a lot of their inventory. Not only this, but it was also, they say it's a strategic move that was aimed at supporting the introduction of their new products and services, which we will get into now, because I think there is plenty of growth opportunities still to come. Now, I've shown you what they have in the pipeline down here with longevity and hormone health coming to the United States. Should be this year. Now, we've already seen that HIMS and HERS are actually hiring for practitioners in these kind of roles. Also, we have the fact that Canada, the patent on semaglutide, which is Ozempic and Wegovy in Canada, Novo Nordisk essentially forgot to renew the patent in Canada, which means that now HIMS will be able to just go over there and compound GLP-1s and sell them without it being illegal, without any issues from any patents. Also, we have the lab facility that they recently acquired in February 2025. Now, this at-home lab testing will be another growth pathway that I think will give HIMS a massive advantage. They say here that it supports deeper subscriber relationship and offers more innovative treatments because HIMS and HERS will have more data, and these more robust insights will be able to accelerate AI efforts and expand access to high quality care. I agree with them on this. I also see the huge potential in peptides. I recently did a little bit of research into peptides, and essentially they are strings of amino acids that you can't really patent. So peptides actually, by the looks of things, can offer a hell of a lot in terms of metabolic function, and this obviously ties into the longevity offer. I think in the more distant future, peptides will become a huge growth runway for HIMS. And yeah, I see huge potential there. Moving on to HIMS financial targets. So HIMS has actually come out with these targets. To a lot of people, they seem very high. A 2030 revenue of at least 6.5 billion. So at least 6.5 billion, that's what they're saying. So that is a lot of growth from now. And a 2030 EBITDA of at least 1.3 billion. So using these assumptions, I have made some valuations. So using the current price, if they miss their own revenue goals by 1 billion, so you can see their revenue year end, 5.47 billion. If they miss it by 1 billion, this is what we get. So you can see here, I've input a share dilution as well of 3%. So this isn't a buyback, this is a dilution. So this means that 3% more shares will be entering the pool every single year. I've also said that the free cash flow margin will increase by 0.75%. So I think this is very, very achievable. This really isn't much of a growth in terms of free cash flow margin. I think this is really in my opinion, less than a base case, more leaning towards a bear case. But nevertheless, if the stock were to trade at a 3% free cash flow yield, currently trading at a 2% free cash flow yield. So if the free cash flow yield was to get larger, which by the way is worse for the stock, with these assumptions that offer a margin of safety, you're getting a 9.4% return. Personally, I wouldn't be buying in at $46, but my position is actually down at $35.70. And this is the exact same thing, but for my position, and you can see at 3%, I'm basically still getting a double over 5 years. I'm definitely happy with a 14% CAGR is very good news for me. And these are obviously with the margins of safety. So what if they were to actually hit their goals? They'll definitely outperform the S&P 500. You can see here that their goal was 6.5 billion in revenue, and their net income here I've got at 1.23 billion. The stock is trading at a current PE of 61 at the moment at a price of $46. If the stock was to drop to a 30 PE, which I think is likely, you'd see a 20% CAGR from here when they hit their goals. Obviously, you can look even lower at 25 times. At 25 times earning, you're still getting a double over 5 years with a 15.63% CAGR. Now, for me, at my price, these numbers look crazy good. If they hit their targets, then I'm definitely going to outperform. It's a big if, hence the bold. but we shall see. I am still bullish on the stock. I'm still going to hold my position. If the stock does hit the $70 mark again, which is 100%, pretty much 100% up from where I am, I will be selling. If we see $70 this year, I will be selling out. So I do think that I will outperform the S&P 500 with HIMS and HERS at my buy price. And talking about outperforming the S&P 500, we can see here that my portfolio is currently outperforming the S&P 500 by 15.67% over the period of about 2.5 years, 3 years. It's outperforming by 15.67%. Thank you guys for watching. Please hit the like button and subscribe if you like the video, and I'll see you in the next one.
I'm hopping out Ferrari, my house is 3 stories. I'm still independent cause jobs couldn't afford me. The meetings were boring, for real I was snoring. The VP was fine, yeah, she treated me kinda corny.